hit record, and then share screen. Can you see my screen?
Yeah, I can see your screen. My deck's on yours. I don't need to share it myself.
Yeah, no, it's on mine, so don't worry.
Great.
Good morning, everybody, and a very warm welcome to How to Set Up and Fund Your New Recruitment Business, brought to you by the Recruitment Startup Hub. We're absolutely delighted to present this first episode as part of our series that we launched earlier on in September. We're a group of trusted suppliers representing the Recruitment Startup Hub to bring to you some useful information over the next 6 months. This is the first of 6 interactive webinars, so we're absolutely delighted to welcome a huge number of hopefully new startup recruitment companies to help you on your journey over the next 6 months. We did have over 50 registered participants for today's session, so hopefully we'll see them coming in throughout the next few minutes. But just to make you all aware, this session is being recorded and we will provide to you the recording after the event today. You will receive a follow-up email. So hopefully you can all see my screen. We're trying to keep this session as interactive as possible. So if you do have any questions throughout today's presentation, please pop them in the chat. We'll invite you forward. We do welcome you to pop your camera on and also engage in conversation throughout. So please do so. We'll hopefully get the best out of this session that we possibly can. So the way that we have brought these sessions together is to start at the very beginning of the journey. So we thought this first episode would cover how to set up a successful recruitment agency and move forward through funding, and also having a look at how that would look from a banking perspective and what opportunity you might have from an international side too. So just a couple of introductions before we get started. My name is Vincent. I'm head of sales here at Simplicity, and we provide funding and back office support to recruitment companies. I'll talk to you a little bit more about that in just a second. I'm also delighted to welcome one of our partners, Mark Williams from World First. He will be talking to you today around banking, the difference between banking locally and internationally, and how World First can help you on your journey. So once again, any questions that you might have, please pop them in the chat. We'll do our very best to get those answered for you. But let's move on and start the session today. So I've brought together a bit of an overview of what it looks like to set up a successful recruitment business and how you might do that from a funding perspective. So when we look at this, there are a few options available to you as a business. I've put some of those on the screen here, but if we take ourselves back to the start of the journey that you might have, you would probably be looking at setting up a recruitment business with some experience. So you might be a successful recruiter working in an established company at the moment and have decided to take your first step to move forward into your own business. You might want to set up as an entrepreneur overnight. One of the key blockers that you might find is finance. And finance is something that we want to demystify. We want to give you an overview of what's available to you, what's the difference between the finance options, and how can you accelerate yourself moving forward. So on the screen now, we've got a few options here of finance that might be available to you. And the reason that we look at finance options is so that you can have a healthy start to business. You can reduce any of your immediate cash flow requirements and give yourself the best possible chance to move forward. You may be talking to clients that you want to place workers with, but you might not have the upfront finance to support you in doing that. We want to give you an overview of the options available. So the first option is having the ability to self-fund. If you are in the fortunate position where you've got your own investment to put into the business, that was great. That gives a huge amount of advantages. It also means that it's the cheapest option to you, but there are some things to consider that we'll have a look at in a second. You may also be looking at a business loan, so a standard loan from a high street bank or a finance company to get you going, move you forward. But this would be a general option of bringing finance into the business. And of course, that comes with some key considerations as well. There's also the opportunity of looking at invoice discounting, factoring, and of course, recruitment finance. So if we have a look at these in their individual sections, and hopefully this will bring to life the options available to you so that you can make an informed decision of how you would like to move forward as a company to get yourself started. So first and foremost, self-funding does what it says on the tin. This is an opportunity for you as a business to put some of your personal capital in and of course use that to move forward. This does mean that you would be taking on 100% of the risk of your business, and there are a couple of things to consider. Should you self-fund, the payment of your workers is then your debt, and this may not be insured unless you have an insurance policy separately. So once you've sent those funds from your bank account, that risk is then 100% you as a business in order to get that back from your client. On top of that, you also are then in charge of your own admin and your credit control in order to chase in the debt once you've paid out the workers up front. Unless you've got a large investment, self-funding may also restrict your cash flow, restrict your opportunity as a business, and of course, restrict your growth moving forward. You do also have the opportunity of a business loan. So a business loan is typically provided by a business bank or a finance company. It may also be provided by a private individual. There are some key things to consider here when looking at bringing together a business loan. You will be required to provide some level of security that you're going to pay that loan back. When we look at financial institutions, they base their security on risk, and there'll be different types of security that's required. You may be required to put in some matched funding. So quite often, if you require a certain amount from a bank, they will also want to see that you have got the risk appetite too to provide the same amount. You may need to provide some security. So if you own an asset, such as an expensive item or perhaps a home, you may need to put this forward as security against the loan and or a personal guarantee as an individual director. Some of these things will, of course, then act as security against your loan. Should you not repay the loan, the lender may then come after you for repayment via those stages. Some of the key stages that we follow when applying for a loan, first and foremost, the application stage. So this is normally quite lengthy and requires sometimes trading history so that the bank or the lender can see the aspects of risks involved. There is also a credit assessment that is required. So this normally involves yourself, a bank manager or a finance manager to run through some of your personal assets. They'll consider your credit worthiness, and then they'll submit a credit overview to the underwriter. You'll then get, hopefully, a loan approval. Once this has been approved, you'll then move into an agreement, which will typically provide to you an overview of how the loan is going to work. This will then give you your APR, so your interest, and also the term that you're going to look to move forward. You'll then be required to repay the loan. Normally, this looks like a monthly repayment over a set amount of time, 6, 12 months, and then into years, 1, 2, 3, 4, 5 years, however long that agreement has been pulled together. Then you will want to come to a completion of that loan. So it may be possible to make early payments on a loan. However, in some cases, you may have early termination fees that may be required to pay. So just keep an eye on that should you be looking at a typical loan. I'm just checking the chat facility to see if we've got any questions coming in. Angela, I can see you've been very kindly tapping away there to support us with that. So if anybody does have any questions, please pop them in and we'll do our very best to answer those. So that's self-funding and business loan. Let's have a look at some of the other options available to you as a business. Invoice discounting and factoring. So invoice discounting is an opportunity for you as a business to raise an invoice for a product or service and then sell that to a third party. This is where you may have, let's say 100% of the invoice would be £1,000. You may look to receive a percentage of that through a finance facility or through a third party. What does this look like? So you would issue an invoice. You would then have an invoice discounting agreement. So typically a percentage of that invoice would be provided by the financier. You would then receive advance payment. So typically with payment terms, when you raise an invoice, you might have 30 days date of invoice payment terms, which means from the moment you raise that invoice, it can take up to 30 days to receive payment. Invoice discounting would mean you would get a smaller amount of the invoice, but you would receive it up front. After the advance payment has been sent to you by the financier, the client would then be required to pay within the agreed payment terms, and then you would receive the remaining payment. This option would reduce the amount that you would receive in return, and that would then, of course, have an impact on your profit margin significantly. The other option that's available to you is what we call factoring. So this is a similar process to invoice discounting. However, in this case, you would receive a percentage of the invoice up front, and this would also then normally have a monthly service fee for the facility. What this does mean for you, though, is that you would receive immediate cash flow. So you would have the invoice paid immediately. However, that would normally be a percentage of the invoice still. So you wouldn't receive 100% of the invoice up front. In some cases you might, but in the majority not. So this would provide to you immediate finance, which means that you would then be able to have a healthier cash flow than waiting until the 30-day payment terms. In some cases, you will also have the ability to receive support on managing the credit control of your business. So as a company, if you are factoring an invoice to a financier, they may also offer support when providing credit control. So this means that they would help you chase the debt once the invoice has been raised and you have received payment.
Identify entity.
Oh, could I ask everybody to go on mute, please? Thank you. So this would reduce your credit risk and also improve the amount of credit control that's provided by the third party. This does, of course, mean that you would be outsourcing the finance. So you would be offloading the time that's consumed of managing, collecting invoices and allowing you as a business to focus on what you do best, which is, of course, hopefully business development and growing your business. Some key things to consider when we look at invoice discounting and factoring. There is normally an upfront cost to put the facility in place, so make sure that you are aware of that if you are exploring this option. There are sometimes, or in most cases, funding caps. So this is the total amount of funding that is available from the financier. Included in that is a concentration limit. So this is a specific limit within that agreement where the financier will allow a complete limit on a certain area. So this might be a certain client or certain industry or certain aspect of your agreement. This is a secondary limit on top of a funding cap. In most cases, you will only receive a percentage of the invoice raised to be funded. With finance, factoring and invoice discounting, quite often this is not recruitment specific, so it would be a general finance option. And also, in most cases, debt protection is something that is not offered as standard. So please make sure that you understand the whole process that's being followed before committing to any of these options. But the key benefits for these is that it would provide to you a percentage of your invoice upfront to allow you to have a healthier cash flow. The key things that you'll be looking for here is to give you the best opportunity to grow successfully and also reduce the amount of time that it takes to receive the funds into your bank account.
Good morning. Is that Sunday?
Yes, we can.
Again, could I please ask everybody to go on mute if you're not already? Thank you. Okay, so what are the alternatives? And this is where I'm delighted to introduce you to Simplicity. So on top of all of those options, you do have another option, which is called recruitment finance. As a company, we've been in business for around 20 years, and we've learned a thing or two during that time. What we've done is pull together all of the best bits of finance options and also added on to that a back office support. So as a company, we provide to our customers 100% finance upfront. So as a recruiter, if you're taking a step out of the business that you've been successful in to set up on your own, you will know that some of the key requirements is all around finance. We will provide 100% finance so that you can set up your business, get your clients on board, sort your workers and your candidates out, send them out to work, knowing that we will pay those workers in their first week and then thereon after. We will then reclaim those funds from your client. We'll take out the margin from us in terms of what we charge. We'll pay you your margin, and then we'll clear the debt on the back of that. This allows you to have 0% risk in terms of setting up the business and having the ability to move forward with a finance option. On top of that, we'll also provide to you debt protection. So in most cases, this is 90% of the total amount that you have outstanding on the ledger, which means you would be responsible for only 10% as an excess. On top of that, we also provide full back office support. So this is where we would run the business for you. We have a number of different functions in-house, which allows you to run the business. So we have a tech system that is inbuilt, and this gives you the opportunity to run the business through that. It acts as a bit of a CRM system as well. It allows you to keep a track of all of your candidates and your clients. It allows you to manage timesheets, raise invoices, and of course see a full snapshot of how your business is performing. Some of the key things that we pull out of the benefits of recruitment finance, it is of course flexible recruitment finance, so it's specific to your industry. Debt protection is included as standard. There's no restrictions or hidden charges, and this is a pay-as-you-go service. So there's no monthly service fee. There's an opportunity for you to raise invoices as you place workers, and of course the credit control is included as standard as well. On top of that, we have an industry-leading payroll team. We also have compliance and reporting included as standard. Our credit control team is completely self-sufficient in terms of how we work as a company. We have a look at the risk appetite for you as an agency too, so that we keep you safe. And we also have our own pioneering recruitment technology included. This is an opportunity to include finance and back office as a standard. There's no extra fee for the back office. There's no extra fee for the tech that's included either. And this is an opportunity for you to receive everything as a bit of a one-stop shop. The way in which a charge is provided to you is that it is a percentage of the invoice that's raised to your client before the addition of VAT. So it keeps everything very simple for you when you're looking to work out the profit margin that you might look to retain as a company. So that's a very high level overview of the finance options available to you as a business, taking you all the way through from self-funding through to banking opportunities, more strategic finance options, and then of course recruitment finance. Hopefully that's given you a bit of a high level overview of who we are as a company and how we can help. There are of course other companies available to support you, but hopefully that gives you a bit of an insight as to what's available to get you moving forward. So I'd now like to open up the opportunity for any questions that you may have. So if there's anybody on the webinar at the moment that would like to ask me any questions, or they have any general questions in relation to finance, you've got myself and some of the key partners of the Recruitment Startup Hub ready and waiting to ask them. So just whilst we're waiting for anybody to ask any questions, I'm just going to have a quick look in the chat.
I think you've got 3 in the chat, Vincent.
Great. Okay. So I've got a question from Janet regarding what is the margin percentage. So margin can mean many different things, but most importantly, when we talk margin, we're talking the margin that an agency is going to make on the process of placing candidates or temporary workers. So what we mean by margin is the profit margin that you would be looking to receive as an agency. Sometimes margin can also be perceived as the margin that you're charging for your work as well. So it can have a couple of meanings. So it's always best to make sure that you're talking the same language as your client or customer.
Yeah,
Hopefully that
so
answers your question, Janet. Is Janet
no,
there? Do you want to ask any
yeah,
further?
yeah, sorry, that was when I said that I meant what's the percentage that you're charging off the salary, the invoice that we're placing. So if we're placing you mentioned that the charge for the back end office support, what's the percentage?
Okay, so that would be very specific to the company that we are dealing with. So we would need to do that on a quote basis. But to give you an idea, we charge a percentage of that end invoice before VAT. Typically, we would be charging anywhere from 3% up to 10%, depending on whether this is a temporary agency or a perm agency, the industry you work in, and the level of turnover you're looking to generate. So there's a few things that we would need to know to give a quote, but hopefully that gives you a general idea of how that works.
It does. Thank you so much.
That's okay, Janet. Thank you for your question. A question from Lionel. Do you fund neutral vendors like GRI, Matrix, and Commensura? The simple answer is yes, but again, that would depend on the whole supply chain of how it works between the agency and the vendor, etc. A question from Roxanne. Is it temporary only, or do you deal with perms as well? As a company here at Simplicity, we deal with both temp and perm, and both of them would receive 100% upfront finance. Hopefully that answers your question, Roxanne. Steve Ash, you've been working with Simplicity a while now, and it works perfectly, very approachable. Okay, so not a question, but some feedback. Thank you very much, Steve. That's great to hear. And Angela, what impact has the rise in interest rates had on financing in this last 12 months? So really good question. So it would depend on who you ask that question to and which company they're representing. But ultimately, the impact has been on us as the financier. So it's all about the cost of the product that we're providing, and our product is the finance. So the impact for us has been that it's cost us a lot more to provide the service that we provide. But what we have done for our customers is given a bit of grace on those fluctuations. So the impact has then not been provided to the customer immediately. So the way we work is we provide a 1% grace period. So unless the base rate increases by a whole 1%, we wouldn't look to pass that on to our customer. So the impact has been on us as a company rather than our customers immediately. But I think across the whole industry, the increase of this rate across finance has been massive, and only in some scenarios we've seen that pass on to the end customer. Thanks, Angela. Any more questions from anybody? Some really great questions we've seen there. Happy to take those throughout the rest of today's presentation, but I'm eagerly awaiting to pass over to Mark Williams. Oh, one question from Janet. How safe is the IT security backend system? Janet, if you're there, do you want to just give me a little bit of context behind that question?
You mentioned that alongside the recruitment finance, there's also that back-end system that works like a CRM system, where you could use that to store clients, candidates' information. I wondered how safe that is in terms of like what security's been put on that.
That's a really good question. Not being an IT expert, I would need to go and get some further information, but I do know that there's been extensive amounts of investment put around the security of that system, but specific in terms of what that looks like, I'd need to go and get the answer. So I will get the answer from the IT team to let you know, but I do know that there has been a huge amount of investment put around that. Okay, so no further questions coming forward. So what I'd like to do at this stage is move on to the second part of this webinar, and I'm delighted to welcome Mark Williams from World First, who's going to take us through the next section. So Mark, do you want to give yourself a bit of an introduction and an overview of what you're going to run through?
Yeah, thanks, Vincent. Really interesting first half of this webinar, and good morning, everybody, and thanks a lot for taking the time out to join. To give you a brief introduction to myself, my name's Mark Williams, and I essentially lead the European Partnerships Relationship Management function at World First. I manage the relationship with the Recruitment Startup Hub and Simplicity in Business, as well as a whole suite of other key partners and global networks. In this part of the webinar, I'm going to focus in a bit more depth on banking and on payments, both domestically and internationally. I think that, you know, it's important to acknowledge that when you're looking to start your own recruitment business, it's both a very exciting and also quite a stressful journey to go through, and there are so many things to consider. And actually, all too often it's a bit of an afterthought when the business is up and running and you're working on filling positions, and then it's a kind of oh, hang on a minute, how do I get paid? Where do I get paid to? And sometimes banking can be an afterthought, but unfortunately banking also isn't a quick thing to get set up. So I'm just going to run through a bit of an overview of establishing a banking presence and what the options are available to you. Before I do that, I'll give you an overview or a high-level introduction into World First. So, Vincent, if we just skip a couple of slides forward. So, who are World First? So, World First has been established as a fully regulated e-money institute since 2004. We have a very typical FX company backstory of being founded by two former investment bankers who left the UK banking industry, recognizing that SME businesses in particular were being grossly underserved by the banking industry, particularly those that were conducting business cross-border, and that there was a real lack of consistency and transparency around costs and a real lack of support available to businesses. So World First was initially founded as a counterparty that would sit alongside a primary counterparty bank relationship to facilitate the movement of funds cross-border, be that collecting payments from customers overseas, or be that paying suppliers, or be that managing multiple currencies at a treasury level for multinational operations. And over that period of time, we've served over 1 million businesses worldwide. We have around 250,000 active business clients today. We've got around 600 staff across 19 global offices in 13 different countries, and we basically move several $1 billion annually in terms of the cumulative volume on behalf of our clients. If we skip to the next slide. Our mission really is to make it easy to do business anywhere with fast, simple and affordable international payments. However, our business has really evolved beyond being an international payments company to being a much broader payments platform. We now essentially provide a platform and a financial footprint for businesses that is multinational, that is multi-currency. So we offer local accounts in 13 different currencies and offshore in 6, and essentially provide a solution that enables businesses to be able to collect revenues multinationally through multiple payment channels, manage balances, manage associated risks and conversions, and manage payables. And I'll come on to that in a bit more detail. If we go to the next slide. Thank you, Vincent. So in terms of how we measure up, we're very different. World First has quite a unique space within the market. We're very much not a traditional bank. In fact, we're not a bank at all. We're not licensed as a bank. As I mentioned before, we're an e-money institute. There are some functional differences between working with an e-money institute and a bank. There are also some security benefits, which I'll come on to a little bit later in this presentation. But we have 19 years of cross-border payment experience. We're longer established than many of the digital challengers, and not as long established as many of the traditional banks, but ultimately a lot more flexible. And as I mentioned, with a number of security benefits, we enable a far wider range of payment methods. So methods in which customers can not only receive payments but distribute payments utilizing local payment networks anywhere in the world, from the UK to Europe to the US to China to Hong Kong to Singapore to Australia, New Zealand, etc., etc., etc. And we have a very transparent and fixed fee structure which stacks up quite favorably both against challengers and the traditional banks. Again, I'll come on to this in a bit more depth a bit later on. If we go to the next slide, I'll come on to what I really wanted to talk about today, which is the reality of banking. And for those of you that are already established as a recruitment startup business, I'd be very curious to know what your experience has been in terms of setting up a bank account and establishing a banking partner. So perhaps if some of you would just drop into the chat function, whether you managed to successfully obtain an account and whether you found that to be a frustrating process or a straightforward one. I'd be curious to see your feedback. But if we go on to the next page, every business needs an account, right? It's quite simple, just like every individual needs an account, right? Every business needs an account because without an account, you can't get you can't build a transactional history. And so why isn't it always easy to get one? And that's because many banks, particularly the longer established traditional high street banks, require a period of trading history or activity before they'll provide an offering. And that can be frustrating because it's very chicken and egg, because how can you build a trading history without an account in which you can be paid and make payments from? And so which one comes first? So we get a lot of clients kind of turning to us because they are becoming frustrated that they are, unable to meet some of the fairly rigid requirements of entry with high street banks to get that initial account. There also can be issues around direct location. So if you're operating in a country that's different to the country in which you're located, it can be really complex in terms of getting local accounts in countries where the directors aren't located. So, we do a lot of work for businesses to help them establish a banking presence in the United States and Europe, for example, when they don't have a locally registered entity and they're here in the UK, because those local banks just are very reluctant to give accounts. And that can be frustrating. It can be also frustrating if you're trying to operate a recruitment business in the UK market, but you yourself are working from, Spain or Germany or the Netherlands or anywhere else in the world. And in fact, many banks, and Barclays being an example of this, are proactively identifying these existing clients from their portfolios and proactively closing accounts of long-established clients. We actually had a recent client who came to us because they had an 8-year banking history with their counterparty bank, and the bank turned around to them one day and said, because you're not in the UK, because you live somewhere different, we're not going to give you a business account anymore, and you'll need to find an alternative by the end of the month before your funds go into holding. And that could be complex as well. And it can also hinder any businesses or companies that seek to grow into new global markets and generate export revenue, which is quite ironic, really, given that there's been this whole agenda post-Brexit from the government of, trying to encourage UK PLC to grow revenues from overseas. But actually banking is proving a hindrance to enable companies to do that. And within the recruitment world, there is a significant opportunity to generate higher margins, higher fees, and more profitability from overseas market like the US, where you can quite comfortably generate double the fees for the same service if you've got the right connections and the right point of market entry. And then there's internal processes as well. So, particularly with the digital, with the traditional banks, it can take months to open up an account. You know, it can be really challenging, and it can be a really time-consuming process that, you know, requires the submission of a lot of information and a lot of supporting documentation. And quite similar to what Vincent was talking through on the finance side, you know, a number of personal guarantees and information on you personally as the UBO or the beneficiary of that company. So, you know, there's a few things to take into account. If we just go to, if we just press the button at the bottom, I think I've got a key takeaway here that I would leave those of you who haven't perhaps started to explore banking yet. The key takeaway that I would leave is that this is a consideration that you need to make as early as possible in your setup journey. So, you know, without a bank account, you can't physically trade. So there's no point in providing a service to a customer if you can't get paid for that service. And, you know, if you're going to get paid separately into your personal account, then reconcile it, you know, that's going to just create work for you, and also, you know, some tax complexities as well. So the sooner you can establish an account, the better. I think I saw a note coming in from Janet. So yeah, Tide, easy, you know, they certainly fall within the digital challenger bracket, and digital challengers are much quicker in terms of being able to set up accounts. So there are many options available to you out there. And if we go to the next slide, I'll just kind of give a bit of a breakdown over, you know, where to look and also what to be aware of. So, you know, there are pros and cons to working with traditional banks and working with digital challengers. Pros are that, you know, from a credibility perspective, you're generally dealing with, you know, long established brands with a clear presence, with a reputation, good or bad, but you know, with a good deal of security, because, you know, they've got the regulatory standing, they've got all of the security and controls, they sign up to the legislation that protects customers against, you know, unforeseeable fraudulent activity, etc. And I've just added a couple of asterisks there, because for those of you who don't know, I think most people do nowadays, if you watch Martin Lewis like I do, it's something that he bangs on about constantly. But there is a, you know, under UK banking license and under the FSCS, there is an £85,000 capital guarantee threshold per financial institution. So anything up to, you know, £85,000 is completely protected under a traditional bank. In terms of the cons, traditional banks, they can be agonizingly slow. You know, we see that for personal needs, and it's certainly no different for business. And there can also be, you know, minimal service and support that's available to you, particularly if you're doing something that is outside of the norm of a standard, or what they would perceive to be a standard business, and particularly if you're operating multinationally. The pricing also can be uncompetitive, and there can be some restricted payment methods and slow clearing times depending on how you're getting paid, and also how you're making payments as well. From the digital challenger side, you know, there are certainly, as Janet has already alluded to, much faster setup times. Digital challengers are generally completely digitized processes in terms of onboarding, and therefore the process of setting up an account can be much more of a breeze compared to a traditional bank. You just need to be, you know, able to navigate the setup process and upload the right required information, and have the supporting documentation that's required under anti-money laundering legislation, which is all relatively standard stuff. But some of the cons of the digital challenger space, and you know, this is not the same with all, but just as a kind of a general rule, there can be very limited support available to your human interaction. So there are a lot of platform-based options now where actually you don't get a relationship manager, you don't get a phone number to speak to a customer service team. If you have a query, you log it online. You're speaking to a bot, and that can be frustrating when you just want to speak to somebody about something in particular. So you know, there are some service shortfallings within that digital challenger space if you like to interact with fellow human beings. The fees can really vary within digital challenger space. They can vary from the good to the bad and the ugly. You know, you need to make sure that, you know, when you're looking at potential banking partners, that you're looking at a multitude of different options, and you're picking something that is functionally going to work and meet your requirements, but also commercially is going to make sense for you as well. Payment methods, again, can be limited, subject to the challenger that you're using. There can be reduced security. So, not all digital challengers sign up to the same legislations that banks and other financial institutions sign up to in relation to protection for clients against unforeseeable fraud, etc., etc. There have been some, I'm not going to name names, but there have been some, quite highly publicized cases where people have fallen foul to working with challengers who don't sign up to protective legislation. So, make sure that you do take the time to do the research and that what you've got works for you. And if you've done your research and you're comfortable and the platform or the proposition does work for you, then that's fantastic. But just make sure that you assess every option that's available to you. I think I'll just pause there. We might have a couple of questions in here. Steve, how long ago did you start? I think that's for Steve Asher. Okay, so there's no questions for me in there, so I'll just carry on. So if we just sort of open up again, so I'll put the World First logo there in the middle. In terms of going back to what we do, World First sits kind of somewhere in the middle. We're very much a fintech. We're very much a platform that delivers a digitized experience, but one that was built on the foundations of a traditional broker business. We also heavily leverage the counterparty relationships that we hold with tier one banks. So, a lot of digital challengers provide wallets as opposed to bank accounts, and they are fit for purpose in terms of moving money electronically in some respects, but not recognized as local accounts. What we're providing is accounts through tier one banks. So we bank with Citibank, Barclays, and JP Morgan as our primary three. We also have relationships in place with HSBC and Bank of China, as well as some other local banks. And so when we provide an account, actually it's a localized account that's sat with a tier one bank. So you'll see that the bank address is actually JP Morgan in New York or JP Morgan in Canary Wharf, for example. So we sit somewhere between. We don't provide a complete banking service, and that's because we operate under an e-money license. The advantages of an e-money license over a banking license are that from a security perspective, I mentioned that £85,000 capital guarantee threshold. For institutions and challengers that work under an e-money license, the way that we are allowed to conduct our business is different to a bank. So we don't lend, we don't speculate, we don't invest, we don't trade on markets, and we certainly don't leave deals open. Everything that we do is back to back. We also are required to operate segregated client accounts, which means that we never have access to nor ownership of client funds. Our business model, frankly, is wholly boring, but therefore completely secure. So when clients have funds on deposit with World First, they simply sit in that account until the client instructs otherwise. Client funds do not mix with our own capital. And for that reason, under our licensing and under the FSCS, there is an uncapped capital guarantee threshold. So if you find yourself in the fortunate position in the future of having a balance greater than £85,000, it doesn't matter to us whether it's 85 quid, 85 grand, or 85 million pounds. The protection over those funds is the same, and clients never lose ownership of those funds. One of the downfalls of working under an e-money license is that if you have a cash requirement, which not a lot of businesses do nowadays outside of the retail space, but we're not licensed to handle cash. We don't have branches. You can't deposit cash with us in the same way that you can't deposit cash with many digital challengers. You also can't withdraw cash. So any cash services are prohibited under an e-money license. And so if you require, cash functionality, then you need to look towards the traditional banks, or you need to look at a cash collection and deposit solution to sit alongside your digital accounts. Vincent, if we could just move on to the next slide. I'm conscious of wanting to leave enough time available to take any questions. So essentially what we provide is a multinational account solution. And if we go to the next slide again, We offer essentially one account. So when you register an account with World First, you're able to open up a multitude of accounts in multiple different currencies, and you can actually open up multiple accounts in individual currencies as well. So, for businesses that are operating and are providing a service multinationally, we can give accounts in all those currencies listed locally. So the first 13 there are onshore local accounts, and the 6 beneath that are our offshore accounts, which is Saudi Riyal, Swedish krona, South African rand, Israeli shekel, dirhams, and Swiss francs. And the difference between a bank account and a local account is quite simple. If you have a euro account with Barclays, it's a euro account that's in the UK. It's not compliant for tax registration. You won't be able to register for a tax rebate with the local tax office, and in most cases you can't get paid using local payment rails within Europe, and it will take 3 days and make it more expensive and cumbersome for your customers to pay you. When you have a local account, we're providing a pounds account in the UK, dollar account in the US, CAD account in Canada, etc., etc. And they're connected to all of the local payment mechanisms, which means that your customers can pay you much quicker, often in real time, for very low cost, and far more simply. So it also it enables you to distribute payments locally, as well as being able to pay and track payments to local tax offices. So as you accrue a liability for tax, you can actually pay directly to tax offices in the countries that we provide local accounts, and you can also track those tax payments. Beyond routing payments through for invoicing purposes, we can also connect to a whole heap of marketplaces and payment gateways. So if you have a requirement to enable customers to pay by credit card, for example, you can implement a gateway partner and accept payments by credit card straight into your World First accounts. And where if you are operating multinationally and you do have different respective currency balances, some of which you may not require for payables, we provide a named relationship manager that you can speak to, who can talk to you about currency risk management and help you convert from one account balance to the other. So we have in-country human support, and this is where we really differentiate from a service perspective to the challenger space, in that we try to deliver the best of both worlds. We deliver a highly integratable end-to-end platform that provides a financial footprint in anywhere in which you wish to conduct your business. That platform also integrates to automate the reconciliation of receivables and payables, both into Xero and NetSuite. We have 6 further accounting software integrations coming next year, but with the backup of human support and human relationship management. So you can speak to somebody in the country that you're in as and when you need to about anything which might arise. If we go to the next slide, please, Vincent. In terms of risk controls, we also implement a number of smart risk controls on our accounts. So, we do money laundering scans. There are fraud prevention controls around payments. It has been known that, we've had customers who have tried to pay somebody for what they think is a service, only for us to flag that actually that is an account or a beneficiary that is linked to fraudulent activity. And so we've proactively prevented businesses from losing money to fraud. We have quite strong inbuilt account security. So we have a multi-approval layer. We do beneficiary verification before payments are sent. There is a separate journey for creating payees to payments, etc. And we do ID checks and verification on things that flag as well. So there are smart risk controls that are inbuilt to our platform that are designed to protect your business, which in this day and age is important. And if we go to the next slide, I think we're just coming to the end here. So my details are on the next slide personally. I've tried to keep that relatively high level and stick to time, but I welcome the opportunity to have a conversation with anybody who has any questions that they want to discuss with me directly following this, and I'm also very happy to take any questions that you might have now.
Brilliant. Thank you, Mark. I definitely learned a lot from that overview as well. And it's great not only to hear that you're providing the functionality to do the day-to-day banking and the international banking, but you're also providing a huge amount of risk mitigation for our businesses that are listening to the webinar today. So whilst we are waiting for some questions to come in from the audience, we are joined today by Angela Cripps from the Recruiting Gym, who is one of our partners within the Recruitment Startup Hub. Angela, I'm sorry to bring you in and put you on the spot, but I know you deal with recruiters day in, day out, and you act as a coach and a mentor for many. I'm sure you have conversations with recruiters around some of the areas that we've covered today. So I just wondered if you might give us your overview and opinion on some of the areas that we've covered and how important it is to spend some time considering these areas.
Yeah, that was going to be the first thing that I was going to say. One, because my experience was it took about 6 weeks to set up my first business bank account. Now we're looking over 20 years ago now. But getting the right one can make a huge difference. And if I just share my experience of that bank, I've never been into a bank with them. I've never had an issue. I think I've spoken to them twice in that period of time, and that's because they rang me to say that you're going to go overdrawn today, so I could do something about that. And so therefore I'm glad to say I've never been overdrawn in that account. I then inherited another bank when I bought the Recruiting Gym, and oh my goodness, what a difference. I think I've been into the bank 4 times this year on its own just to sort out PIN issues and problems that have come up. I have to go through, I've got a 5,000 overdraft, you know, just in case. And I have to go through an hour and a quarter interrogation, I would say, into my finances every year with them. And they made it last year so difficult. They actually paid me back some money because I complained. I think I spent 6 hours on the phone altogether with them. It was just ridiculous. So this can be a huge impact on your life. So my recommendation is, yeah, do your research. What is it that you actually need? Because those 2 banks are part of the same group, and yet it's a very, very different experience. So therefore, if you can get the one that's going to work with you, and I love the idea of e-banking. I don't want to go into a bank. I don't want to have to go anywhere. I'm going to have to go today because my pin's locked again. It's like, it's so frustrating. But yeah, if I can do it all online, that's great. And the fact that, Mark, you're saying you've got UK-based people, you haven't got bots, because again, I tend to find my experiences, you end up going round and round in circles, and then it clicks you back to the beginning page and you're like, no, I've done this already, don't take me back there again. So it can be. I had that
experience personally quite recently, and it is so frustrating. Yeah. And when it asks you what you want, I now just put, I need to speak to somebody.
And they might call you back, they might not. You could be waiting, I think, 1 hour and 15 I've waited to get onto the phone to actually speak to someone. So the problem is when you want to speak to someone, the likelihood is it's something that's an issue, it's a problem. And therefore, when it's finance and banking, it's very stressful. So the last thing you need is to be taken around the houses and everything going wrong and the rest of it. So yeah, finding a bank that works with you and supports you and you can talk to a person, and that person is capable. I will add that on. I don't know your bank, Mark, but the capability of those people at the other end as well can make a huge difference to your experience of running a business. It shouldn't be. It should just be a side piece, shouldn't it, that actually just helps facilitate that money. But from all of our experiences, I'm sure, even with personal bank accounts as well, if you get the wrong one, it can just add stress to your life that you really don't need, and can cause problems in the business. And that's definitely not what you need either. Okay, is there anyone that wants to share?
I just noticed, Angela, that you mentioned you paid 15 quid fee on a 100 quid bill from South Africa yesterday. So yeah. You know, in terms of just to cover off fees, because we work locally but multinationally, in terms of payment charges, you know, we charge 30 pence for a pounds payment, 30 pence for a local euro payment, and 4 quid for anything else anywhere in the world. So,
so it doesn't matter
you know,
how much it is. It's not a percentage, 30%. No, oh, God,
no,
see, that would have saved me money straight away. I am
so,
considering it. I tell you, Mark, I don't know what.
you know where I am if you want to have a chat about it. I'm very happy to do, you know, what's a nice way of putting it? A health check. You know, I'm always very happy to do a health check.
Yeah, no, that would be great. And take him up on that, everyone that's on here. Certainly, if you are looking to start and having a look at some of the names and go and find you on LinkedIn. I didn't get to be at the launch. I was on holiday in Santorini, so I thought I'll come to this first one and support and hopefully reach out to a few of you people so that you know who we are as well. And yeah, share our experiences of banking, because it can be great. It can be awful. So take the time, do your research, speak to a few and see which one meets your needs. Yes, if you can get on with them and you get a great vibe from them and all of that, that's an add-on. But actually, it's about what you need. So take some time to think about that as well. And if you need help, then reach out. If you're thinking, well, I'm just going to start a temp business, I don't know what I need, then reach out to the people that do.
Thanks, Angela. I think you've definitely mentioned something really important there as well. You don't know what you don't know, and quite often you don't find out until the last minute. So having some experts in the industry available to help out in that moment of need is really important. So it's not just myself and Mark and Angela. We have a group of trusted suppliers who are all ready and willing to support you as new recruitment businesses to move forward at pace. And of course, be as successful as you possibly can whilst mitigating risk. Just looking at the chat facility, we do have a question from Janet. Thank you very much. I think it's a question for me, so I'll take that. Do you do credit checks on prospective companies? The answer is absolutely. That would be the first step that we take. So as a company, we would help you in looking at their creditworthiness, and we'll be able to give you an overview very quickly. So we'd be able to give you a prospective limit on any client that you're looking to work with. And then the second part of your question was how much of the back office support does Simplicity handle? We handle the whole back office end to end. So there will be elements that you need to do as a business, but we will advise you on that, and we'll give you everything you possibly need to be able to complete those steps. And then, oh, Angela, you've popped in your details, which is great. For anybody who would like to reach out and understand a little bit more about the Recruitment Startup Hub, we'll include the contact details and the website address. If you haven't done so already, I'd really recommend that you check out the online platform. All of our partners have spent a huge amount of time pulling together some great content, and this is an opportunity for you to take advantage of that and all of the years experience that our trusted suppliers have got to give you that overview in a bit of a snapshot. So do pop over to the online platform. On there as well is all of our contact details. So if you'd like to reach out and have a one-to-one, every single partner has agreed to do that. It's free of charge as an initial one-to-one. Should you want to take on any of the support thereafter, I'm sure they'll be delighted to talk to you about what support is available and what cost that might be for you as a business. So I don't think we've got any more questions coming through. We're just coming up to 11:30. So I'd like to say a huge thank you to Mark from World First. Thank you for joining us today, and thank you for providing such a great overview and some hints and tips. A huge thank you to Angela from the Recruiting Gym for stepping in at the last minute to answer my question. Sorry to put you on the spot. And of course, a huge thank you to all of you who have joined today as a live session. We really appreciate your support. Hope that you've taken something from today, and should you want to have further support, please do reach out. Until next time, we hope you have a very successful end to the month, and please do reach out to us in November for episode 2 of series 1 of the Recruitment Startup Hub. Thank you all, and speak to you all soon. Bye-bye.
Have a great day, everyone. Thank you.
Bye, everyone. Good luck with your businesses.